Okay, good morning, everybody. It's gone 10 o'clock Central. Welcome to this week's webinar, number 4 of 5 in our Emoji Trading Order Flow Suite version 3 webinar series. I hope you've had a good trading week. It's been really busy and volatile. I'm looking at the charts now and the action just steps up again. So I hope you've been able to trade well and with discipline and carefully within this volatility that we're seeing around the time of all the central bank speakers. If in doubt, stay out, protect your equity. But really interesting stuff to be watching live over the past couple of days. So over the past 3 webinars, we've introduced various indicators within the order flow suite, discussed what order flow conditions they can help you identify. We've had a quick walkthrough of what some of those conditions mean and represent, so that you can start to understand how to apply them to your trading. What we're going to do today is a little bit different. Rather than looking at specific indicators, we're going to be looking at various features within the order flow suite and go on a bit more of a deep dive technically. There's only so much that you can convey through web documentation or videos or this kind of thing. So it's an opportunity to explain these features and hear them, if you like, from the horse's mouth. I'll be walking through some of the examples and some of the documentation. And my aim is that you're left with a good understanding of the thought process behind these features and some ideas of how you can start to apply them to your analysis and start to explore. So we'll be having a mix of static slides and also interaction with Fiera Chart. And what we'll be covering in this advanced feature deep dive is the Advanced Lookback filter, Advanced Pullback Analysis, brand new feature we introduced in version 3, some interesting ways of how you can use EmojiZone dynamic cycles and a higher cycle count for some longer time frame analysis. And then we'll be wrapping it up by looking at how we can actually utilize the underlying data that's present within emoji zones for things like alerts, multi-time frame overlays, and potentially automated trading. So the examples intentionally are going to be relatively simple, but the aim is that we're giving you a good understanding and lots of food for thought on how you can make best use of a lot of the new and very powerful features within Order Flow Suite version 3. So we will kick off and we'll start with the Advanced Lookback filter. So the Advanced Lookback filter is common to many Order Flow Suite indicators where you might want to filter out the supply-demand event that the indicator can identify based upon whether it's occurring at a higher high or a lower low. We can see, let's imagine we're looking at price rejector, which is a really good way of identifying turnarounds. You probably only want to see a price rejector turning round at what you consider to be a high, whether that's a swing high or the daily high or the session high. If you have a price rejector condition in the middle of a sideways market, it's extra noise on the chart. So we can use the Advanced Lookback filter to use relative price levels over a time period that you specify to filter out some of the noise so that you only get the more significant signals. Now, in version 2 of the Order Flow Suite, we allowed you to specify a quantity of bars over which to look back. But we've gone a bit further in terms of the capability of the filter that allows you to do some neat things. So what I'm going to do is use the following set of charts just to illustrate the logic behind these various modes. The inputs are common to all indicators that have the Advanced Lookback filter. So you can filter on whether the bar must turn around on price. So if we're looking for an event at the top of the bar, you can select whether or not you want the bar to close lower than it opens. Likewise, if you want to see events at the bottom of the bar, you can specify that the bar must be an up bar. So that's this input, input 15, require price reversal. From here on in, it gets really interesting. So we have this higher high, lower low price filter period. This is what sets the mode for the Advanced Lookback filter. and we've got about 5 different options. The simplest of which is bar quantity. So this, very simply, I've got a 5-minute chart up here, is saying on the current bar, if we have got an event within the order flow, we only want to see it if the bar has made an equal or higher high than the price over the previous 2 bars. You can obviously specify the bar quantity here. A bar quantity of 1 means the current bar. A bar quantity of 2 is current bar and previous bar, and so on. So what we are doing here in this highlighted area is, with a bar quantity of 2, if this rightmost bar, this black doji, had an order flow event within it, because it has made a higher high than the previous bars, our total bar count is 2, we'd allow it through the filter. If, however, I set the bar quantity to 3, if I go back 1, 2, 3 bars, the high of this bar is not higher than the highest high over 3 bars. So the event won't pass through the filter. Pretty simple. Depending upon the time frame, the periodicity of the chart that you're using, this may be useful, but we have wanted to create some stronger filtering methods than bar quantity alone, because, as you know, if you've heard some of the previous webinars in this series, I take the view that the market does not care about the chart period or the chart type that you're looking at. So for you to determine a swing high or swing low is 7 bars on your 5-minute chart is quite arbitrary. We can maybe do some stuff that's a bit more contextually relevant than that. So let's have a look at the next mode that we can utilize. What we've got here is we can filter on the session high and session low. So on this chart, I've overlaid the day session RCH high and the day session RCH low. So what we're now doing is by setting the price filter period session high or session low, we will only evaluate bars which are at the session high or session low. This can be good if you're looking to trade the edges back into value, if you're looking for reversion trades. So if you want to see peak absorption at the session high or session low, or a price rejector, this is a great way of filtering out that context without you having to think about, have I got the signal and am I at this line? The indicator will do it for you. What I want to bring into play here is another new input we've got, which is the higher high, lower low price threshold. This is really neat. What we can say to the advanced look back filter is, I want to look at events at the session high or session low, but I'm also happy if they're within, let's say, 1 tick of the session high or session low. So if you set this price threshold to 1, this candlestick, if we assume the low of this is 1 tick away from the session low, this would also be passed through the filter. I'm sure that you've seen many times we've had a turnaround, 1 tick, 2 ticks off a significant level, like session high, session low, and here's a great way of allowing the indicator to filter out a lot of the noise you're going to get in the middle, but not miss out on things that are near an extreme. And you can apply this price threshold offset to any of the lookback modes within the advanced lookback filter. The third mode is similar to session high, session low, but we consider the daily high, daily low. So the subtlety here is the daily high, daily low, if you're running an evening session chart. So, here's ES, overnight, of course, precedes day session. CME start the day at 5 p.m. previous day. So here, the daily high in yellow is higher than the regular trading hours session high. So be mindful, if you're using an extended session chart and you're breaking your charting out into both sessions on the same chart, using daily high can potentially restrict what you see versus the session high, session low. I'm just mentioning this, so that you don't fall into a trap of going, I'll use daily high, daily low, and then wondering why you're not seeing something at what you perceive to be daily high, daily low. It's because overnight may well exceed the range. Now we get on to some really neat stuff. I'm sure many of you won't be using time-based charts as your quick, or finessing timing chart. You might be using tick charts or reversal charts. But to illustrate the concepts of the next two filter modes, I'm using a 5-minute chart of the S. The vertical lines represent our half-hour divisions. So we open at 8:30. Here's top of the hour, 9 o'clock. Here's 9:30, etc. So within each 30-minute period, we will, of course, have 6 5-minute bars. What we can do is tell the price filter to look back by a certain number of minutes. So on this candle, I've said, let's look back by 10 minutes, which 5-minute chart is going to be 2 candlesticks. So you can start to put a time element into your filtering, even if you're using a range chart or a tick chart. On those charts, we look at what's the starting time of the candle, and we look to capture the relevant times within the candles, even though they're not time-based. So you can start to apply time even on a non-time-based chart. So this allows you to start to filter based upon the context of the trading day. And maybe if you are a market profile trader and you like the idea of trading within the 30-minute rotations, this starts to get interesting. So you can think, okay, within each 30-minute window, here's effectively our 30-minute TPO or candlestick within the chart. I can start to consider what's going on within each larger time slice, even though I'm looking at a faster chart. But the thing is, a simple look back on its own is going to be rolling, similar to a moving average. If I'm looking back 2 bars, 3 bars based on the minute division, I'm not going to capture the start of each new rotation. And that's what our final mode, top of minute period since session start, allows us to do. So here, and this is one way in which I use the advanced lookback filter with some of the indicators. On my faster chart, I can say reset the clock at the top of the hour and at the bottom of the hour. If I set it to 30 minutes, you might set it to 15 minutes. You might want to actually say, let's look in a 4-hour window and consider highest high, lowest low over a rolling 4-hour period since the start of the session, and then let's reset each time. So here, this candlestick, if we're looking for events at the top of it, this will pass through the filter. Within this 30-minute time slice, as it forms, it was the highest high. If we were a rolling 30-minute, you can appreciate we'd be looking back 5 or 6 bars. This would knock it out from the filter because it's a higher high. So top of minute period since session start is a really neat way of insulating your faster chart from its own period, but also taking into account other time frames with the context of the underlying session and other charting methodologies which you may be using. That was a pretty rapid walkthrough of the Advanced Lookback filter. It's fully documented on our website with these examples. If you do have questions as we go through this, please pop them in the Q&A box. I'll do my best to answer them either at the time or at the end. But we've got a lot of relatively deep stuff to go through today. And of course, this is being recorded, so you can go back and review this if we need to go back in more detail. So the next thing I'm going to talk about is a new featured version 3, which is Advanced Pullback Analysis. We introduced this, I think, with Price Rejector in webinar 1 or webinar 2, and it created some questions. What I'm going to do here is explain the concept again using a static illustration and show you how you can simply apply this setup to some charts to start to explore the concept. So what I've got here is a simple footprint. It's a 30-minute footprint, and it's set up using one of our study collections, which we call Order Flow Guru 1 column. So we've got a bid-ask footprint, we've got a delta profile behind it, and we're coloring the delta according to whether it's positive delta or negative delta. And if you can read the raw data, here's a great way of understanding what's going on. What we've also got going on in the footprint, or the Fiera Chart numbers bars, which not a lot of people use, is the pullback column. This is something you can very easily set up within Fiera Chart numbers bars. Fiera Chart lets you have 3 columns of data within a footprint. So typical uses will be maybe bid-ask in 1 column, maybe the number as delta in column 2. And you can specify backgrounds, parameters, text parameters for each of these three columns. But Fiera Chart gives you another column called the pullback column. And just like these main columns, you can specify the data that you want to see. Now, within this study collection, we've pre-configured it to only show bid-ask. So we keep it simple, otherwise, we're going to run out of screen space. But what this is doing, this 30-minute candle has auctioned down. As we've pulled back from the low, the pullback column starts tracking the volume that's occurring since the pullback. So I refer to this as the auction within the auction. If whatever chart period we're looking at is wrong, and what we actually care about is how does volume accumulate at price, because that's what we're going to make our decisions on during the trading day, our horizontal quick chart might miss things. If it's too fast, we're not going to collect enough volume in it. If it's too slow, we're not going to see the full picture. But if we've got something contextual in our footprint, so here's a footprint that represents TPO rotations. As we pull back from each TPO rotation, now we're seeing the auction within the auction. We reached a low, now we've gone back up. So you can start to read the volume here. So what we can do using advanced pullback analysis is we can start to analyze the volume only within the pullback column and look using emoji indicators for order flow conditions that are occurring within here that we may not capture, or we almost certainly won't capture in the main bar because the volume's different. But if we're on some arbitrary shorter chart, we might not capture it in those charts either because there's not enough volume. So we've done some preset study collections to make this easy to start exploring. We use Price Rejector and Absorption Pro for pullback. So what's going on here? We know that Price Rejector looks for exhaustion at the top of up bars with at least an imbalance on the other side. So we can see as we've auctioned up through the pullback, we're running out of aggressive buying. The ask volumes are getting smaller as we get to higher prices as we auction back up. 47 versus 4, well, that's 1,100 something % selling imbalance. So we've got the basic criteria for a price rejector. The way this study collection is set up is during the pullback, we highlight the price levels within where the order flow event has occurred within the pullback within the main bar. So this is telling you that these levels, as we've retreated from the low, are actually representing a potential turnaround. It might be a good entry point. You wouldn't see this on its own within this volume. Okay, we can see the ask volumes reducing a little bit, but of course this ask volume is made up of volume that occurred on the way down as well as on the way up. The 204 versus 173 is nothing to write home about. We can see it much more clearly here within the raw data. And then let's make it really easy to understand by actually painting out these levels that we're interpreting here within the main candlestick. We also put this condition indicator, so this is pullback supply condition subgraph, above the main bar. That's the principle of advanced lookback analysis. Sorry, advanced pullback analysis. It's how we can apply emoji indicators to the auction within the auction. You don't need to display the pullback column. It's a lot of extra information for us to be filtering out. You can just rely on the fact that once you start to use the indicators in this way, you are looking at what's happening as we retreat from highs or lows, and you can easily see what's going on. So the way in which you set this up, and I really encourage you to use the study collections as a way of starting to learn about this, is using the pullback evaluation option, you select either current bar only or emoji zone at bar end, which I'll come back to in a moment. And then within the emoji zone visualization modes, for simplicity, I recommend you start by saying pullback only. The reason for this is you might want to use different sets of parameters for evaluating the pullback column to evaluating the main candlestick. If we go back to this example, actually this one would go through, if I was looking for consistent absorption, this would give it to me. I've got positive delta at each of these price levels. But you might find you want to use tighter parameters to analyze the volume in the main bar and looser parameters within the pullback column. So I recommend applying 2 instances of a given indicator to your chart. One is only there to visualize what's happening within the pullbacks. The other one is there for your main chart with fixed projection or dynamic mode. And of course, in that main candlestick indicator instance, you wouldn't have any pullback evaluation. You'd have that set to off. The other thing you can do with the pullback evaluation is, as well as highlighting when we've got a condition in the current bar only, so that's this, I want to say magenta, but it might be cyan. Let's say pink. It's this pink block here. If this holds at the end of the bar, and this can be a good trigger, we can track that level at bar end as an emoji zone. So you can see here, we had, as this candlestick pulled back from its high, we had a price rejector buy condition within the pullback volume. Look where the next candle stops. So you can see that these pullback levels, when we turn around intra-bar, can have some validity to understand going forward. Also, look on the way down, look at this big delta also in the same area. So these levels are, I like to think of them as market generated. You know, all information is market generated, but these may not relate to structural things like pivot points or fibs or value areas. This is really the underlying supply and demand that's happening in the auction process. So by setting pullback modes to emoji zone at bar end rather than just current bar, we can actually plot this forward, showing this is new demands, which would have held, this one would have broken it, and you can track these levels no differently to any other event that you're tracking in the main candlesticks. So I encourage you to use the pre-built study collections to start to explore the pullback analysis. Use it on a really simple chart, almost no indicators. Start to get a feeling for the levels that this mode is showing you. And then you can start to see how this can be quite effective to really get potentially good intra-bar entry triggers. You know, we know how to find arbitrary levels based upon pivot or this kind of thing, but it's quality of entry and tight stops that is crucial when you're day trading with leverage. So with this kind of thing, you can know, well, actually, based upon this auction back up here, I'm very happy to be short once we get below here. And I know if this condition disappears within the pullback, we go above it, it's probably not the right time to really hang on to that short possibility, get out, scratch it, 3-4 tick loss, we might have a better entry somewhere up here. So you can use this to really finesse your entries based upon the auction within the auction. Now, we make advanced pullback analysis available within Price Rejector Pro. So here within the pullback, we're looking for exhaustion and potentially absorption at the opposite ends to the way the pullback's going. So as on this candlestick, as we auction back up, we're looking for reversals at the top. Or on an up bar, if we auction back down, we're looking for reversals at the bottom of the pullback. So that can be quite nice if you, let's say in this candle, you had a short bias, you haven't found a good entry, we pull back and you get the pullback condition, that's potentially a short entry. We also make it available on edge zones. Now edge zones are all about aggression. So with edge zones, as we're auctioning up or down, if you had a short bias, you'd be looking for edge zone selling coming in, aggressive selling, hitting the bid. That would highlight here, even though we may not have an imbalance within the main candle, that could be your entry trigger. Same principle on small prints. We covered small prints in quite some detail last week as well. Small prints generally are going to be an indication of aggression through lack of volume. So you're looking for aggression in your planned direction of trading. And for those indicators, the pullback parameters really are aligned to how you would configure the indicators for analyzing the main candlestick. We also make advanced pullback analysis available in Absorption Pro. Here, we only look for one condition. There's no parameters to go and fine tune. So with Absorption Pro, what we're doing in here is we're looking for, if we are auctioning back up during the pullback, we're looking to see when the aggressive buying within the pullback is being absorbed by stronger passive sellers. That can be really good because we're highlighting when, okay, we're retreating away from a low. Actually, the market's potentially running out of steam, but however many orders are lifting the offer, there's somebody bigger selling who's absorbing all of that. That's the person you can lean on. If you're wanting to get short, you see we've got absorption at the extreme as we're moving up, and that's the default way in which Advanced Pullback Analysis works with Absorption Pro. You now know your level below which you're really happy to be short and above which the guy who you're leaning on here isn't there to help you anymore, so get out because he's not there. And that's a really neat way for entry triggers. So I encourage you to explore these. My personal favorites are using it with Price Rejector Pro and Absorption Pro. But these are very good as well if you're looking for, forward movement in your planned direction of trading. So that takes us through Advanced Pullback Analysis. The next thing I'm going to talk about is long time frame analysis and Emoji Zone dynamic cycles. We covered the Emoji Zone visualizations in our first webinar 3 weeks ago. I'm going to start out by recapping this, then turn over to Fiera Chart and show you what on earth I'm talking about. So, just to recap, in Emoji Zones, we have the same set of inputs for all indicators that utilize Emoji Zone visualization. I've left out the colors, the transparency, etc. But the really smart mode is dynamic mode, and using dynamic mode to evaluate the order flow. So what happens within Emoji Zone dynamic mode is we find an event, a supply or demand event, which one of our indicators highlights based upon interpreting the traded volume within the footprint. If we find demand, our Emoji Zone paints as new demand, and we show the indicator condition as well. So using our default coloring, we would say, okay, here's a price area where we've identified new demand. As subsequent bars trade within that price area, we're evaluating the order flow and that trading. There is not infinite demand. Sooner or later, a level's going to break. When someone enters the market here, we're expecting they're likely to defend it, but they haven't got unlimited buying power. Otherwise, the market's only going to go one way. They meet their objectives, at some point they don't care about it. So if the order flow tells us that as we've traded through this price area that we've identified through our supply and demand events, it looks like the demand is holding, we change the appearance of the Emoji Zone. It still remains solid, but it's a bit lighter, it's a bit more transparent, and we've got an outline around it. So we call that continuing demand. So it tells us the level's been tested, but it's held. So you can start to look at, really simple trading approaches, such as if you believe a new event is unlikely to break on its first test, why not front run it or look to go long at some point within it? So, very simply, if there's new demand, I'm going to wait for a retrace and I'm going to go long in it. I know where my stop level is, but I'm working on the basis that new demand should continue. Alternatively, if we know that new demand's unlikely to break, we can say, well, actually, here's somewhere I want to trade towards. You might think, I know the point where I would exit a trade because I've got somebody who's happy to buy. And one of my key things is if you don't know where you're going to exit the trade, why on earth are you getting in? How can you evaluate your risk-reward ratio? So if we know we've got demand here, we've got a potentially good exit level, we can be thinking, okay, I'm happy to enter on a retrace, but if I see a selling opportunity up here, I know the first point where I would look at buying it back, which allows you to evaluate risk-reward. So you can think about these new levels in a couple of different ways. Continuing tells us that it's been tested and it's likely to hold. The next state it can go into, though, is exhausted demand. So we've evaluated the order flow as we traded through here, and the order flow implies to us that whoever kicked this off isn't interested anymore. We're experiencing that there's a lack of continuing demand. The demand has exhausted. Therefore, when it tests at some point in the future, we think it's unlikely to hold. At this point, you don't want to be buying it. You can be thinking, you know what, I'm quite happy to change my bias around this level because I'm interested in somewhere below it. Once we break it, if you have set state reversal to on, we change new demand to new supply. And then we continue with the same analysis. Now here we went straight to exhausted supply. Levels will always move forward through the cycle, but they don't have to go to the next state. We can go straight from new to exhausted or from new demand into new supply if we trade through it. But after we've gone through this state reversal one time, then the emoji zone finishes. So that, if you like, is the life cycle of an emoji zone through these events. And that represents one dynamic mode cycle. What we can do, though, is increase the number of cycles that we look at. So here, we've got a new supply event. We traded through it in a way which implied it exhausted. We closed above it, becomes new demand. We go above it. It's okay. It looks like it was continuing there. We broke it. If this was set to one dynamic mode cycle, we'd stop this emoji zone here. But because I'm looking at more cycles, we turn this new supply that became new demand back into new supply, and we continue evaluating it again. So it broke again here. That would have been the end of 2 cycles, but I've set it to 3. We're happy to continue this cycle again. Now, a word of warning, if you run a high cycle count on a lot of indicators on a really fast chart, you are going to kill your computer. There's too many drawings being put on the chart, and actually you're going to kill your brain as well. There's too much information to evaluate. But what we can do with this can really get quite interesting on longer term charts. So I'm going to flip over to my Fiera chart. Here we go. What I've got here is a daily chart of ES. And I'm using small print indicator. And I'm only looking for 0 prints in the bar body. The reason for this is if we end the trading day and a price level is left with a 0 on a thick market like ES, this is pretty rare. It means that there was enough supply demand to push through a price level, probably stop being triggered, and there's no opportunity for two-sided trade. So that shows us that it was, kind of a rare event. We don't want lots of these things. We want to find information generated by the trading in the market that's pretty significant. I'm using dynamic order flow visualization on it, and I've set it to 3 cycles. And now within this chart as well, I think I've quite a lot of data loaded. Okay, I've got just over a year's worth of data loaded. This is actually one of my long-term weekend analysis charts. I'm interested in these hidden levels in the market. Now, what gets really interesting when you start to use this, especially with the dynamic cycles, is how they hold over time after more than one cycle. You're not going to see them holding on this daily chart. But what I'd encourage you to do, and we've included this as a study collection, we call it 0 prints for daily charts. I would say pull up a daily chart. It must be set to intraday. It can't be historical. But pull up a daily chart, something like ES or CL. Use this study collection of 0 prints for daily charts. And then on a given day where we revisit a new level, so we're looking for, let's see, here's a good example, this candle coming down here, where you see a level that is in a new state, so it's solid red or solid green, then look at your intraday chart and look at those price levels and see how we traded around those levels. These levels act as really good stopping points and targets that you may not otherwise spot if you're looking at these arbitrary structural things like value areas, pivots, fibs, this kind of thing. This is representing where aggressive supply entered, it changed its role through its trading, but people remember. And these are things that you typically are not going to see just through levels alone. I can recall on ES, I think it must have been some point during Q4 last year, there was, I think, 2888.5 was in play, and it came back after about a month. And clearly it's a level that's important to somebody. They're playing with lots of 8s in their trading, but it didn't relate to anything structural. I can also recall, I think it was probably during the rundown that we had. I think it was the rundown we had late last year, and maybe one of the runs up. We just stopped intraday at a level, and there was nothing structural, be it pivot point, TPO, volume profile, that gave us any logic to that level. But then by applying multi-cycle analysis to zero prints, I could see actually it was a zero print that we traded through it 2 or 3 times in the past, and we had stopped to the tick at that level. So have a play on a daily chart and see what you make of this. It gives you some very interesting intraday stuff as you start to explore it. Okay, let's see where we are. Okay, final section of today's webinar. We're going to think about the emoji zones, but actually the data that's sitting within them. Now, the emoji zones historically within the order flow suite have been all about visualization. We put drawings on the charts that allow you discretionarily to make decisions about what's going on. And we have done these drawings, and we've also put an indicator condition in so that you know, okay, I've got an order flow event within here. If you think about what we've just been looking at and the idea that, we might want to track a zero print and we might want to track it over time, we want to be aware of this level, then a drawing on its own isn't enough. It would be really neat to know that we have got this sitting in a subgraph that we could maybe overlay or onto a faster chart, or create an alert around, or maybe even write a basic automated trading system to say, if I take the view that a level of new demand is unlikely to break first time round, as we come down to it, I'm happy to buy it, and I'll exit, I'll scalp it for maybe 3 or 4 ticks. But you don't know when that's going to trade, nor can you necessarily watch it or react quickly enough. So what we have done within version 3 of the order flow suite is make it very easy to access the underlying data of the emoji zone price levels and also the state in which these price levels exist, whether it's new demand, continuing demand, exhausted demand, etc. So we'll spend the rest of today's webinar explaining these concepts and going through some examples using Fiera Chart. So every study has a pair of subgraphs at the end, subgraphs 59 and 60, which give us the supply condition or demand condition. These are the default triangles that appear, but if you don't want any visualization on your chart, these will evaluate to +1 if we have a supply condition, 0 if we don't. So these are binary outputs of our indicator. This is a 1 or this is a 0. So, really simple, something has happened within this candle. Within the emoji zone inputs though, if you say populate emoji zone supply demand data, we populate a whole bunch of subgraphs which are present in every indicator which supports emoji zones. So let's go through the maths on this so you can understand why there's so many subgraphs. An emoji zone can have 6 potential states: new demand, continuing demand, exhausted demand, new supply, continuing supply, exhausted supply. So we've got 6 potential states. Fiera Chart limits us to 60 subgraphs. So an emoji zone might relate to a single price level, 0 print's always going to be at 1 price. But some indicators, we create emoji zones across multiple price levels. The price trajectory is going to be at least 3 price levels. So an emoji zone has a high price and a low price. So we've got pairs of prices across 6 states. Now we're at 12 subgraphs that we need to use. So what we do is we create the nearest 3 emoji zones in each state with the high price and low price pairs. number 1 is what's nearest price, number 2 is one behind that, number 3 is one behind that. And we populate these in real time when you use this input, populate Emoji Zone supply and demand data. If you want, you can set these to be visible. The graphics are not as nice as those which we can achieve with Emoji Zone visualization. Plus, you're only going to see the nearest 3 levels in each state. But this can be a good way for testing your alert logic or automated trading logic as you're building up more sophisticated charts. Now, when a supply-demand event occurs, the immediate intrabar event is always going to populate new demand or new supply. If we had a historic level that was new demand within new demand 1, and then we're trading above it, of course, but we've now got more demand coming in, the price levels in new demand 1 are going to drop into new demand 2, and new demand 1 is going to replace what's happened intrabar. If that disappears, this will drop back up. So in real time, we always have a picture of where is the nearest demand below me, including demand that's just happened, where's the nearest supply above me. But of course, as levels drop out of the queue, we may find that there's something up here which isn't available in the subgraphs. But actually, once we go beyond 3 levels in any state, do you really care? What we care about is what's above me and below me right now. So we can get a really good data picture of what's going on within the order flow by populating the Emoji Zone supply and demand data. Let's go through some of the things that we can do with it. I'm going to go through 3 or 4 use cases. These are intentionally very simple, but my aim is to give you a walkthrough of the methods and techniques so you can go and explore this for your own trading ideas. So we'll look at how we can use this feature to create overlays from larger timeframes on smaller timeframes, how we can use this for alert conditions, and then how you can use some of the simple automated trading facilities within Fiera Chart to start to play with automating trading ideas. So let's head across to Fiera Chart. Here we go. So we're back looking at the chart which was our 0 prints with multiple Emoji Zone dynamic cycles. So this is giving us a picture of these kind of hidden levels in the market. What I've got here is a faster chart. This should look quite familiar. Now, within this chart, if I go into the small print settings, you can see I'm saying populate Emoji Zone supply demand subgraphs. Yes. Here are my subgraphs. They're all set up to subgraph name and value labels only, and I'm not showing the name. I don't want to see any data stuff on this chart because I'm using this for visualization. But my aim is how can I get these levels onto this faster chart? If I bring up the chart values window on here, then we can see that within the small prints indicator, we're populating the demand levels and the supply levels in each state, demand below us, supply above us. See a 0 here, there is no third new supply level. But we've got, what, 71.25? It's a very compressed chart. 74 something or 75. So we're pulling these subgraphs, we're populating these subgraphs as you'd expect in each state. On my intraday chart, an 8-tick reversal chart, what I've done is I have, I'm using an overlay study. It's renamed itself. Let's explain why. So there's a standard Fiera Chart study called Study Price Overlay. It's well documented at the Fiera Chart website. It's a really powerful study. I've put an instance of this study onto this chart, and I'm pointing it to my daily chart of ES, which is called ZP Daily down here, and I'm pointing it for small print studies. Lots of parameters, read the Fiera Chart documentation on what this is all about. But what I've asked this overlay study to do is show me 0 prints for new demand off the daily chart and new supply off the daily chart. I'm coloring them in a grey color just to stand out against the background. I want to put a line at the last bar to the edge, and I want to see the name. So if I scroll all the way up here, it's about 70, I think we had it. Here's my supply from 0 prints on the daily chart. So this is a great way of highlighting contextual and structural stuff from a longer term chart on my faster chart that I'm using to finesse my entries. If I have a look below, we should see, there we go, here's the nearest demand created from the 0 prints. Now, I run my charts vertically. I want to see a lot of the price axis, but for me, I will be always looking structurally at, open, high, low, overnight, value area, all this arbitrary structural stuff. But I also pull in these order flow levels that interest me from the daily chart, so I know potential exit points or stopping points or maybe turnaround points. So that's quite a nice, simple way we can utilize the EmojiZone data to move information from a longer term chart onto a shorter term chart using the Fiera Chart study price overlay study. We can also do things like set up alerts. So we know here I've got price rejector on this chart. I've got price rejector set up here, just doing something very basic. We're looking for, okay, exhaustion, consistent absorption, and I'm just drawing it with fixed projection so I can see where it is. Now, we've got our indications of when the event occurs. If I pull up my chart values window, once again, on this latest bar, and this is the pullback column, this is my latest bar, we can see we've got our price rejector. Without even populating the EmojiZone subgraphs, my study supply condition has equaled 1 here. So it's not the presence of the triangle, independently of the triangle, which is the symbol here, I'm saying we've got supply. We don't have demands, it's binary, 1 or 0, but this candle in real time is going to give me a 1 to tell me there's supply. So things that I can do with this, within the study itself, nothing complex at all, I know that the condition subgraphs, subgraphs 59 and subgraphs 60. If I want Fiera Chart to give me an alert anytime there's a price rejector, within the Alerts tab, I use the Fiera Chart alert language. It's quite simple. It's a bit like Excel. Again, it's well documented. It's worth a read. But if you understand basic formulas in Excel, you'll get the hang of this. What I'm saying here is when either, so it's an OR logic condition, when either subgraph 59 evaluates to 1 or subgraph 60 evaluates to 1, give me an alert. And you can then determine within Fiera Chart's regular alerting facilities whether or not the message box comes up. Let's just find the alerts manager within here. Here we go. So you can see this chart, as it's been running, has been highlighting when price rejector has done something. And you can configure Fiera Chart, to send you an email or tweet or beep a million times. So if you're not staring at the screen all the time, but you want your attention drawn to an emoji indicator doing something, you can just very simply use subgraph 59 and 60 and a simple alert within the indicator to highlight the fact that the indicator has triggered. You can also use this binary something has happened as an indicator to get into some very simple trade automation. Now, what I'm using here on this chart is edge zones. In fact, we had a client a week or so ago to say, how can I use edge zones to scalp? When I've got aggression in the market, I want to enter at market. And that's something, if you want to do that style of trading, you can build it quite easily with standard Fiera Chart functions. So I've got edge zones applied to the chart here. It's set up Okay, we're doing a 600% imbalance. We're looking for 150 delta between the bid and the ask, so we want to filter out some noise. Now, I'm not doing anything on the EmojiZone visualization. What I'm doing actually is populating the EmojiZone supply-demand subgraphs, and I only care about the newest supply demands. This is about if something happens, enter at the market. So just for kind of debugging, I've set the draw style to Fiera Chart color background at price. So it's giving me, compared to price, the highest price level where we've got an edge zone. Because I'm not highlighting everything, that's why we're not seeing these track out. But you can start to understand that we are, whenever an edge zone occurs, bang, the subgraph populates. So if I go to this bar here and make it the current bar within my chart values window, my new supply is at 29.24. Now, I don't have the ones above it visible, but they're still populated in the data. 26 continues. This shows intra-bar, this hasn't changed yet. This has appeared in real time. We draw this at the end of the bar. But the point is, we are populating new supply 1 and new demand 1 with real-time edge zones, aggressive trading as it happens. Now, with that, I can start to make use of another built-in Fiera Chart study for automated trading. Fiera Chart has got various ways of doing automated trading. There's a spreadsheet system for trading that lets you build some pretty clever formulas. But there's a neat little study called trading system based on alert condition. Now, we saw a few minutes ago how we can write alert formulas using this Fiera Chart alert syntax. So we can use this trading system based on alert condition study to use that same formula language to build some trading rules. Now, what I've done is I've put 2 instances of the study. Let's have a look at enter long. The reason it's called enter long is I've given it that name, but this is trading system based on alert condition. Do I want it enabled? Yes. Number of bars to calculate. I've only said 1. I'm not interested in looking back over time. I'm going to test it through replay. Again, this study is pretty well documented on the Fiera Chart site. Well worth having a play with it. I've built an alert here to say if ID3 subgraph 1, let's just explain what that means. ID3 is the study ID of edge zones. So if ID3 subgraph 1, new demand, high price. If ID3 subgraph 1 equals close, then we have our alert condition. So in other words, if the last traded price within the bar is a demand edge zone, then I'm interested in what's going on. And the action is a buy entry. We've got other things, you know, how many trades will we do? Do we enter intra-bar at bar close, this kind of thing. Obviously, if we're looking at close being aggression in the edge zone, this is very much an intra-bar kind of trading system. I've got a similar alert set up for my sell entry. So I'm saying if ID3, edge zones, subgraph 19, so that's new supply, if that equals close, then let's do a sell entry. Now, as this chart's been running, the red dots over the candlestick indicates that the condition triggered. The green dot underneath also indicates condition triggered. We can use the trade window for our attached orders and this kind of thing. What I will do is just let's kick this chart off in replay mode, just to have a sense of how simple it is to build these basic trading systems and automate them. So I've got chart trade mode on, so I can see what's going on. What you need to make sure of if you're using the Fiera Chart study is that the trading system based on alert condition is enabled, which it is for both of these. Also, within the trade menu, we need auto trading enabled for the chart and also trading enabled globally. So we've got multiple fail safes. We don't want the machine running off and doing crazy things without us. So now, if I bring up chart replay mode, you'll get a sense of how this works. Now, this is something, to experiment with offline, do it on sim. Don't build a trading system and unleash it into the live market, for heaven's sake. Build these things carefully. You can create some disasters if you're not careful. So these are fun things to explore and experiment with, but it has to be handled with care. So if I kick off the replay within Fiera Chart, we should see as this bar forms, sooner or later, it looks like we get some buy aggression and the system will take us long automatically. There we go. So as soon as that bar opened, that was quick. We flew up here. It sold on the way down. We had supply. How about that? You know what? I'm going to flatten this. And let's see what happens as we pick more activity up through this candle. Now, because we're looking at new demand, we retrace here, we should go long. I'll just speed up the replay a little bit so that we can get a sense of what's happening. Uncomfortable pause. Now, of course, it would have been smarter to do this on a time-based chart. Then I would have known. I'd have known how many candles, how long we had to wait until actually we got there. So this one is going to spike me. Shows it's real. Nothing is pre-planned in this demo. Here we go. Okay, there we go. We quickly got some aggression through there that disappeared, and you saw that it took us long. Now, Christine's asked, I thought it was set to not execute until the bar completed. No, I actually have this one set up to enter intra-bar. You can evaluate on bar close only, but this was built based upon a question that came from an existing client who's very interested in scalping in an automated way. He's saying, how can I use an edge zone that as soon as an edge zone appears, I want to enter? And I actually said, I don't think you should do this because, this is, not very contextual. And he's looking to make, 2 ticks, 3 ticks, which for me feels quite high risk. And one of the dangers of these simple automated trading systems is people will tend to be inclined to have arbitrary take profit targets and arbitrary stop losses. Now, if we are going to enter automatically because there's aggression, and only take a few ticks out of it, you might think, oh, I'll go for 2-to-1 risk reward, 3-to-1 risk reward, and I'll only carry a 1 or 2 tick stop. Experiment with these kind of simple trading systems, and you will see that if you are evaluating only one condition, you almost certainly need an inverse risk-reward ratio, which in fact over time can also hurt you as well. The way the market bounces around a lot, if you're looking to scalp 2 ticks or 3 ticks based on something happening now, I would say even if you are running your system on a VPS near the exchange, there's somebody faster with more size than you can trade who is going to be ahead of you. And they're seeing everything you can see. So in my experience, these kind of systems are neat for getting into positions that you would otherwise not see. I run a simple algo just using this study, which looks to front run 0 prints when they appear intra-bar before they fill in, and that's quite neat. But I only do this if I've already got a directional bias and I'm in a position, and that position has got realized P&L. So for me, I do something, let's say I'm long on ES. I will have a system running on micro ES, where if I see a gap, a 0 print within ES, I will front run the gap level, thinking we're going to retrace, and it's a neat way to get more size and scale into my ES position. But you have to handle these things with care, and I have this pre-configured to only trigger if I have got a directional position that supports the gap that I'm looking to front run, and my directional position has got positive P&L. So I'm risking profit from the trade, I'm not risking equity from my trading account. We can start to see how we can use the Emoji Zone levels to, in conjunction with trading system based on alert condition, to experiment with some simple level-based or even condition-based automated trading ideas. Now, in the next example, let's look at some other things we can do. I've got the same setup as well, but I'm using small prints. So I've got the small print study looking for 0 prints within the candlesticks. These are 30-minute candlesticks. And I've got my same enter long, enter short conditions. Let's go straight into the subgraphs and I'll explain what I'm doing here. Within the alerts, now I've got an AND condition. So both of these things have got to evaluate in order for this condition to hold true. Now let's just find a level of new demand and I can talk through what it is. Okay. So there's an Emoji Zone subgraph painting out which is representing new demand. It's a 0 print that occurred somewhere back here. What I've got as my enter long condition is I'm saying if the low price of the current bar is less than or equal to new demand, and the last price of the current bar is above it, enter long. So what I'm looking to do, let's actually draw this. I'm saying if on the current bar we trade down through a level of new demand, but then we trade back up, at the point we trade back up, I'm interested in going long. So I'm looking here to automate the first test of new demand. Of course, I can do this visually, but I'm working on the basis that if I want to use this as an entry level, it may or may not hold. The order flow, as we evaluate the Emoji Zone over time, is going to tell us that. But I'm presuming we're really not going to fly through this. So if we are at it and we come back up, then I'm happy to go long. Now, I can recall on this chart, there was quite a neat example that illustrated this. Let's scroll back and see if we can find it. I think it may be somewhere here. There's an example of the condition. So the idea of this condition would be, we auctioned up here. We've got a 0 print in the bar body. We're above, above, above. Okay, we traded to 1 tick ahead of it. And then we went back up. Now, if I just double check this, I don't think that would have picked it up because we want the low to be less than or equal. You can play within the alert formula syntax to actually take tick size into account. You could say, if the low is within 1 tick, so if it's 1 tick above or 1 tick below, that can also be your entry condition. Let's have a quick look and see if we can find the actual level on this chart that did it. I seem to recall it was somewhere near the beginning. Only 5 years of data in this chart, it shouldn't take too long. Let's have a look. This can be quite neat as well. You know, this is a way of trading levels which are kind of longer term and you may not spot or forget about, or potentially they're going to happen while you're not at the computer. And I find it quite interesting to have these kind of simple automated trading things going on, monitoring ES, but using the micros, certainly out of hours, for low risk. And we can, potentially get into trades at, if using the micros, very low monetary risk while you learn about automated trading. But you might pick up an opportunity to get positions during the overnight session while you're asleep and find out that actually you've got a nice running trade which you had no chance of actually taking in real time during the period, just because you weren't at your computer or you were asleep. Now, where are we? It wouldn't be a demo if I wasn't struggling to actually find the level I want to show you. I set the evaluation up intentionally not to be too complex and looking for offsets around the price level. Now paying the price for that laziness, aren't I, Lee? Let's have a look. Come on, let's see. Nope, that one broke it. Okay, these are the ones, these would have been one tick ahead, but you can see that, you know, trading the retests off these would have been quite nice. We can also start to see just, you know, anecdotally, while I'm here ahead of it, as we've got these levels, okay, we've got a price rejector up here at the session high. That's a price rejector as well. Look at where we stop, and that's why these can make great exit points. So for me, I'm interested in trading these two ways, not only potentially the retest, and let's bounce away, but if I know I'm unlikely to get below this and I see a reason to get short up here, look at my risk reward. Yeah, that's like a dream. So let's have one final look. So I really would like to replay this if I can. Nope, that one broke it. You know what, I think what may have happened is this chart has got a relatively limited number of days loaded, and of course I've left it running. So the event that I wanted to show you that was at the beginning of the chart has now been wiped out through later data. That's a bit annoying. But what I'll bring up again, let's bring up the alert setting just so we can recap what this is about. So the logic that we are looking for here is if the current bar low is less than or equal to new demand, but the close is above new demand, so we've got to go below it before we can close above it, then enter long. So we're trading a bounce off a predetermined level. And just like with the edge zones example, the computer will just sit there monitoring this. I urge you not to run these kind of systems on very fast charts. I suggest run these replays on some really fast charts, see how many trades your logic can potentially create. And, you know, this can start to get scary. You need some really good sound logic if you're only looking at a single indicator. I believe, you know, fully automated trading systems need to be looking at much more than one indicator. We've got to take multiple timeframes into account. We've got to take context into account. We've got to take bias into account. Just because one particular indicator has gone bing is not enough for me to initiate a trade. And when a client comes to me and say, I want to go long automatically when Delta Scalper is positive, I say, well, here's how you do it, but run some replays, and I don't believe over time your take profit 10, stop loss 10 is actually going to make you money. You need to be looking at much more subtle things for smart automated trading. But for some contextual things like bouncing off levels for a few ticks or scaling in, these simple techniques built into Fiera Chart combined with the dynamic support resistance mode and populating these subgraphs combined with trading system based on alert condition, or if you want to get a bit more sophisticated using the Fiera Chart spreadsheet system for trading, can get you in some quite powerful setups. So that is our kind of more advanced way of how we can do some automation using emoji zones by considering the actual price level subgraphs as well as the basic condition subgraphs which appear from the indicator. So we've gone just over the hour. This has been quite a deep dive. We've covered off the advanced lookback filter, so how we can detach the chart we're looking at from its period for finding highs and lows within a window that we care about, and also how you can put a price offset within that. We've had a walk through the pullback analysis, which I encourage you to play about with. Use our pre-built study collections to start to explore that simply using Price Rejector and also Absorption Pro. We've looked at how you can increase the number of dynamic cycles used by emoji zones in order to find and monitor kind of hidden market generated levels over longer time frames. So we use small prints, looking for 0 prints within a daily chart, and that's also a pre-built study collection. Then we use that same example to see how you can use that underlying emoji zone data to overlay this longer term information on faster charts. But we can also use this emoji zone data for alerting using Fiera Chart's built-in facilities and automation of different levels of sophistication. So that kind of wraps up our deep dive. Thank you for joining our webinar today. There will be a recording made available by close of play on Monday. That's going to be posted on our Vimeo and YouTube channels, which is vimeo.com/emoji trading and youtube.com/emoji trading, as well as at emojitrading.com/videos. Next week is the last of our August webinars, introducing the various features in Order Flow Suite version 3. What we'll be doing within that webinar is going through any questions or queries that you may have. So please email us at info@emojitrading.com if there is something specific that you would like covered. And we'll also go through some ideas of how you can start to utilize features and indicators within the Order Flow Suite to build, some nice trade setups that you can apply each day within the market. So until then, please trade well, and I wish you all a good weekend. Thank you very much. Bye for now.